For centuries, cash was more than currency. It was freedom. Anonymous, untraceable, and untouchable by governments or corporations, it protected privacy in a world that constantly demanded identity. Pressing but today, those green notes and metal coins are becoming relics of a fading era. Governments claim the world is modernizing, digitizing, and advancing, but beneath the glowing language lies a darker truth. Cash is being pushed toward extinction. Banks are shutting ATMs, stores are going card-only, apps are replacing wallets, and young generations see physical money as something old, unnecessary, outdated, like rotary phones or typewriters. But the disappearance of cash is not a natural evolution. It is a strategic transformation engineered by central banks, global institutions, and powerful tech firms who see a future where every payment can be tracked, analyzed, and controlled. Cash is not dying on its own. It is being killed, and the world is barely noticing. Plunge the last breath of paper money may be closer than anyone realizes. The shift began subtly, with convenience, confiscation, congressional payments, online shopping, QR codes that made cash feel slow, clumsy, inefficient. Governments used safety as the perfect justification, claiming that digital payments reduce crime and prevent tax evasion. Plunged those narratives even further, insisting that cash slows down operations and digital transactions are cleaner. Every step made physical money seem outdated, undesirable, even suspicious. But behind the scenes, central banks were drafting an entirely new financial architecture, one where cashless economies become the new global model. It wasn't about innovation, alternating. It was about visibility, control, predictability. A cashless society removes anonymity, strengthens surveillance, and gives institutions unprecedented insight into how people spend every rupee, every dollar, every cent. Convenience was the bait.
Compliance is the trap. While cryptocurrencies promised decentralization and freedom, central banks saw a threat to their authority. They responded not by fighting the technology, but by copying it. CBDCs, digital currencies issued directly by central banks, are being tested from China to Europe, from Africa to the Middle East. But CBDCs are not like Bitcoin or private wallets. They are programmable, traceable, fully controlled. Governments can freeze funds instantly, set expiry dates on savings, restrict purchases based on location or behavior. Imagine money that stops working after 30 days, or money that cannot be spent on restricted items, or accounts that vanish with a tap because an algorithm flagged you as a risk. CBDCs give governments the kind of financial power no empire in history has ever held, and the world is sleepwalking into it. Traditional banks are not adapting, they are collapsing. With cash disappearing, depositors no longer rely on the safety of physical withdrawals. Digital runs happen in seconds, not days. Billions can vanish with a single panic-driven swipe. Banks are becoming fragile, brittle, unstable, and central banks are preparing for their eventual downfall. In a world ruled by CBDCs, commercial banks may become obsolete. No need for ATMs, branches, paperwork, or middlemen. The central bank becomes the one system, one point of control. When the next crisis hits, and it will, governments will not bail out commercial banks. They will absorb them. Transporting the collapse of traditional banking will appear not as a disaster, but as a necessary upgrade. Every transaction tells a story. Flush, where you shop, what you eat, who you support, what you value. Synchronized today, corporations already track most of this through apps and digital platforms. But with CBDCs, tracking will no longer be optional, it will be absolute. Digital money creates a financial fingerprint for every citizen. Governments can build profiles, patterns, and predictions. Algorithms can detect anomalies and trigger automatic restrictions. Taxes can be deducted instantly. Fines can be issued without warning. In this new world, you don't own your money, you access it. And access can be revoked.
Privacy once required effort to break, bathrooms out to maintain. In a fully digital economy, privacy becomes a memory. Every purchase, every donation, every subscription becomes a data point. Your financial life becomes a database. Your movements become a map. Your choices become predictions. And your independence becomes an illusion. The final death of cash is the final death of financial freedom, because digital money is not just a currency, unrestricted device. But not everyone is surrendering. From rural farmers to independent businesses to privacy-focused citizens, resistance is growing. Some nations are reinstating cash protections. Others are demanding alternatives before CBDCs become mandatory. People are waking up to the truth. Convenience is not worth control. Digital efficiency is not worth surveillance. Cannon's cash disappears. It cannot be revived. The revolt is small, but every revolution begins with a whisper. Contested won't be dramatic. Thaw no bank lines, no public panic, no overnight bans. Cash will simply fade, bit by bit, until one morning you realize you haven't used a physical note in months. By then, CBDCs will be everywhere, embedded in apps, salaries, benefits, businesses, and daily life. The transformation will feel natural, evitable, inevitable. And that is exactly, the digital banking collapse will not be loud. It will be silent. Psychologists will not feel like a takeover. It will feel like progress. Peacefully, and by the time the world understands what has been lost, it will be too late. Forecasting. For centuries, money was the final refuge of privacy.
A place where a person could buy, save, help someone, or make a choice without anyone watching. But in the new digital regime, privacy becomes a relic, a luxury no longer permitted. In this chapter, the film enters the darker side of CBDCs, not just programmable currencies, but programmable citizens. Governments will argue it's for public safety, banks will claim it's for fraud reduction, tech companies will insist it's for innovation. But behind those soothing phrases lies a truth everyone fears. Every swipe, every payment, every donation, every purchase becomes part of a permanent record, tied to your digital identity. The idea of being financially anonymous ends, and with it, a piece of human freedom disappears forever. Digital money does not stand alone. It connects to the rising architecture of digital IDs, behavioral scoring, and real-time monitoring. The West once mocked China's social credit system. Today, that same blueprint is quietly being replicated, adapted, softened, polished for Western audiences. A missed loan payment? Your interest rate increases automatically. Pensions, too many risky purchases? Your access to credit shrinks. A low productivity score at work? Your taxes adjust by algorithm. The system evolves from reactive to predictive, punishing behavior not because it happened, but because an AI believes it might happen. A society where the wrong financial decision is no longer a mistake, it's a violation. As digital currencies grow, the role of commercial banks begins to evaporate. Why store your money with a private bank when you can keep it directly under the central bank's digital wallet? In economic terms, this is called disintermediation, but in human terms, it signals an extinction event. If billions shift their deposits into government wallets, private banks collapse, not with a crash, but with a silent suffocation. Brokerage shut down, loans shrink, financial jobs vanish,
And the world enters a future where money no longer lives in banks, but flows through algorithms run by the state itself. This is the death of commercial banking and the birth of something unprecedented. When everything becomes digital, everything becomes vulnerable. In this chapter, the film dives into the terrifying Achilles heel of a cashless world. If the grid goes down, the economy dies instantly. A cyber attack on the national power grid, a coordinated assault on the financial network, a systems glitch triggered by an update, a geopolitical sabotage on communication lines. Any one of these can freeze the financial system, leaving millions unable to buy food, fuel, medicine, or transport. In the past, people could fall back on physical cash. In the future, there may be nothing left to fall back on at all. A digital society without electricity is not a society. It is chaos. The world's financial system has been stretched, inflated, rescued, and restructured for decades. But this chapter reveals the final act. Fallback, a reset disguised as modernization. Digital currencies allow governments to wipe away unpayable debt in silence, freeze accounts during instability, discharged, manipulate spending habits, redirect wealth without legislation, enforce new economic rules instantly. The reset won't arrive with announcements. It will simply appear as a transition, a necessary evolution, a technological upgrade. But for ordinary citizens, it will mark a shift more powerful than any recession or market crash, a shift from financial independence to financial dependency. This chapter closes the film with a warning and a question. The death of cash is not fate. It is a choice societies make or fail to stop. Humanity stands at a crossroads. Conformity. Host leads to convenience, speed, automation. The other leads to surveillance, control, and a world where freedom is measured in lines of code.
Imperializations have always been shaped by their money. Gold, paper, plastic. But for the first time, money can shape behavior itself. The documentary ends with the unresolved question that will define the coming decade. When money becomes digital, programmable, and monitored, is it still money or the final tool of control?